Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. You guys already know the drill, so let's go ahead and start off with the markets. So this week we have a huge catalyst that is the first FOMC meeting of this year. And depending on what the meeting results are and what Jerome Powell says in his conference will dictate the market's next course of action for the next few weeks or even the next few months. So with that in mind, do not take whatever technical analysis that I give you guys in this video to heart. Why? Well, this week can be a huge week of volatility that can completely negate whatever analysis that I give you guys in this video. So I want you guys to keep in mind of all the levels and chart patterns that I give you guys, but do not take them to heart because they can be completely ignored or negated by a reintroduction of volatility by this huge catalyst or event. Now, I give you guys my full insights and even my personal bias on what the markets can do this week in the newsletter. So if you guys are watching the video first without reading the newsletter, pause this video now and go back to the newsletter first and read the market summary. All right, so what you guys have in front of you is the weekly time frame for SPY. And there's a huge character trend, change to the price trend. And what is this character change? Well, first of all, we closed above the psychological level of 400 plus the descending trendline resistance plus the weekly 50 SMA. So if we did not have this huge catalyst for this week, we should be all in bullish mode, right? We should all be extremely bullish. Why? Because every technical indicator and every single level is telling us that, well, we are headed to the upside. We are headed for a new bull market. Now, on Friday, we retested my maximum profit target for SPY at 408.50, but we didn't exactly hit that 0.50 number. Instead, we hit a high of 408.16. Now, do I care whether or not it didn't or did hit the 0.50? No, it's only a few difference of a couple of cents. So I will consider this as a retest of that 408.50 area or level. Why? Because we saw a rejection. And due to this rejection on Friday, we ended up at 405.68. Now, you guys already know that with this retest, this is our third most recent retest of this area and level. We got our first one once when we bottomed out in mid-October and when we topped out in late November. And then we got our second retest on inflation numbers and in the FOMC meeting of last year, right? It was the last FOMC meeting of last year that caused this huge move to the downside. So where do we go from here? Well, we're now above this $400 level and above the weekly 50 SMA and above this descending level of resistance. So the only thing that I see for the market is up. But if we translate that perspective back to the daily time frame, things are looking a little bit more shaky. And why is that? Well, we have been going up for the past week and a half, almost a week and a half. And as we are going up, I am seeing the volume slowly dying out. I mean, just check out the last 3 trading days here, right? we saw a big pop on Wednesday, and then we just dropped down, right, as we continue to move higher. And so even if we did not have this upcoming potential pullback from this catalyst, I would have expected to see a catalyst regardless of the upcoming FOMC meeting. And once or if we do get this pullback, I fully expect us to either retest the psychological level of $400 or come back down to around 403. Now, if we do come back down to 403, I want us to bounce between 403 to 404, right? If you guys remember, as we're going up higher, I wanted us to retest 402, 404, and eventually hit 408.50. So this 404 level will become very important if we do come back down to retest 403 as a new level of support. And if we do that, then I want us to consolidate between 403 to 404. Now, for SPY overall, this week, there will be a lot of volatility. I can guarantee you guys that. So if we continue to pull back and stray away or stray further away from this 408.50 level, all we need to see for this uptrend to hold and potentially continue in the future is a hold of this 400 psychological level. All right, with that in mind, let's take a look at our first name. So we have Carvana, CVNA, and we were in this name on Thursday, and we took profits off the table on Friday after this large move higher. Now, the only reason why I'm looking at this one again is that this is probably going to be one of the easiest trades for this week. Why? Well, this is, first of all, a meme name, right? And second, it's starting to act very squeezy. And whenever we get a short squeeze on names like this, we tend to get potential double or even triple in returns once we start to squeeze higher. So for this name, for it to continue, we need to get back over $8, which is the reason why I gave you guys a confirmation entry point of $8.10. Now that is the confirmed long-term entry point. But first of all, with Carvana here, you still have to be very, very careful, right? Even if it does look like it's going to have a short squeeze again for another second leg up after its initial run up here, we can see a potential move down again. Why? Well, we weren't able to hold over $8, and that was completely different from the initial first run up. So with this little rejection here on Friday, there is still a slight chance that shorts can come back down and push this stock lower until it comes back down to retest this descending level of resistance. And that could be possibly around $7.10. But if we start to pull back with very, very low selling volume, we can see a potential bounce at 7.35. And that is an intraday support level here. All right, so 7.35 can become a potential bounce area for the price. Now, for Carvana, again, if we start to get past $8 and eventually pass over $8.10, we can see a huge rally in the price here, and we can potentially hit double digits for its share price. All right, so our second name here is Monster, or MNST. So Monster has been making your typical looking cup and handle chart pattern, and that is inherently bullish. So if you take a look on the weekly time frame, we can clearly see a cup and a handle. Now, we've been respecting this $100 level. This is the golden psychological level that every stock or every company's stock wants to get to, that triple digit share price. And Monster has been able to hold above this triple digit share price for a couple of weeks now. And last week, it performed really, really well as we closed above this small base that we have here, or the handle, part of the cup and handle. And we're able to retest 104 and the previous all-time high area. But the only big problem that I see is that we are seeing a small micro wedge, right? This is a broadening wedge chart pattern within the handle here. So why does this matter? Well, a broadening wedge usually leads to a break to the downside, especially when we are at all-time high areas, right? And this broadening wedge chart pattern can be very welcoming and inviting if it's at the bottom of a downtrend. But when it's at the top of a current uptrend, that gives us bulls fear that there will be a potential huge and large reversal back to the downside. And that could also give us a potential warning that this stock is about to break below 100 again. So that is my only risk going forward for the stock. And in order for us to not see that happen, we need to break away from this wedge completely and set new all-time high price targets. And that's the reason why I gave you guys a confirmed long-term entry over 103.10. Now, that obviously does not look like a confirmed entry point. However, since we had acted so well last week and we're staying above all the major SMAs here, the 10, 21, 50, and now even the 200, this gives me more of a bullish bias just based off of the price action, the price trend, and my SMAs. So that's the reason why I gave you guys this confirmed long entry point for this name once we're able to hold above 102.70, which we had. We did that on Friday. And once we start to go over 103. Now, if you guys want to wait it out, for a potential completion of this broadening wedge, you guys can completely wait for the next couple of weeks for this chart pattern to fan out, or you guys can just wait and see if the price will break over the previous high or the previous high pivot point of 104.65. So this number right here is also the all-time high print of the price. Now our third name here is MBLY. Now the reason why I am looking at this one is that, well, it's a recent IPO, which makes it a very volatile name, but at the same time, because that it's volatile, it can give great returns if you are in the same side as where the price is going, obviously. Now, Mobileye had a very, very nice earnings and a nice earnings reaction, but we have come back down to this consolidation area once more as we've closed below this huge level of resistance at $36. So if we're able to break above 36 this week, then we should be able to see a nice huge squeeze back into the previous all-time high print of $39.19. Now, I love the fact that we have made an inside day on Friday compared to Thursday, which was the earnings day. And the reason for that is that, well, inside day candlesticks can give us a hint of where the price can go because these candlesticks indicate continuation. And what has been the trend so far for Mobileye since its inception here, right after IPO, it's been an uptrend, right? Even during the day of inception, we went up. So Mobileye, definitely have your eyes on this. Have your alerts set up over 36, all right? And we can possibly see a retest of the previous all-time high number of 39.19 or even above 40s. All right, so our fourth name here is XPEV. This is a Chinese EV name. And if you guys remember, we swung NEO pretty well for a great return. So I want us to use those same profits to turn back into a competitor of NEO, which is XPeng. And this name is showing a very, very welcoming wedge chart pattern in a downtrend. So obviously this is not one of those broadening wedges like you guys can see on Monster, but this is still a rather welcoming chart pattern after a huge fall from its highs, right? Of $56.45 in the most recent fall, and the all-time high number of $74.49. All right, so after making this high here, we just been falling down and down and down until we hit a low point of $6.18. So we came from double digits to a single digit. So I truly believe that this one has very, very good reasons to have a nice short squeeze. And that can happen once we're able to break over this descending level of resistance. Now, your entry point is going to be over $11. Why? Well, at some point, as the price continues to form here, the price trend, underneath this descending level of resistance, I will expect the bulls to try to break us over this $11 level of resistance, this horizontal level of resistance. And once we do, we should be able to see another breakout over this descending level of resistance. Okay, so last but not least, we have Unity Software. And just like XPEV, we are seeing a very, very same chart pattern, except U needs a lot more time to form. Why? Well, first of all, we've only retested this descending level of resistance on this macro wedge chart pattern 2 times. And as the price develops more, we'll most likely reject to the downside and possibly retest this ascending level of support that comes from that wedge chart pattern. Now, obviously, this sounds very pessimistic. So if you want me to talk optimistically, well, here it is. For you, we have also a double bottom within this wedge chart pattern. Where? Well, here's the first bottom and here's the second bottom, which it makes a double bottom. Now, if you're able to continue this uptrend, since U has been, well, it's kind of been lagging compared to the overall market run and the overall tech sector run, we can see a very nice short squeeze on this one as well, back to the 40s. So if you're able to break over the previous high of the day, which was Friday's high of 36.99, so around 37.10, we can see a good entry point to have a retest back to $40 and eventually the daily 200 SMA, which is now right at $40.06. Okay, and that'll give us a nice 1 to 4 risk to reward, or even 1 to 3 risk to reward, depending on if your entry point is over 37 or below 37. Now, if you guys just want to wait it out and see a potential rejection, then you guys should, and stay patient, because again, this chart pattern, this macro wedge chart pattern is not completely finished. All right, that is it for this week. Make sure you guys are reading the newsletter over and over again, especially if you guys are feeling like you guys are kind of distancing yourself from the basics. All right, and make sure you guys are subscribed to this channel, and make sure you guys leave a thumbs up down on this video if you guys like the names that we're looking at for this week. And yeah, I will see you guys back in the Discord, and good luck trading tomorrow. Have a good night.